please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. The markets are having a pretty unremarkable kind of a day. 14-point gain on the Nifty, 10,452, and it's been that way since the morning. Although you'd say from the high of the day, the markets actually climbed down. The intraday will show you that, and same is true for the Bank Nifty as well. I'd like to go back to what I said yesterday when we were starting the show, which is the fact that this market has had 3 weeks of pretty strong gains, almost about 5.5% over the last 3 weeks. So you're sitting on that gain, which has come in a compressed time frame, and you're getting into the 4th week hoping for another high one. Well, could happen, but I think on balance, it could be a week where things just consolidate, unless, of course, there are big positives one way or the other in terms of earnings or something else. I mean, geopolitics still is a pretty important driver, although lesser so now as compared to the last couple of weeks. But as I said, it's not looking like it's really running away higher or lower. The metal index is higher, real estate, energy, PSU banks. I mean, you know, all these indices were down 0.5%. They're all higher by about 0.5% this Tuesday morning. Ekta, good morning.
Hi, Prashant. Absolutely. Well, maybe it is the Met forecast, which is, resulting in a little bit of follow-on buying, like you mentioned. So 10,541 currently for the Nifty, and we have the mid-cap index, which is higher by around 0.3%. But nonetheless, let's get talking in terms of the technicals of the market. We have Sudarshan Sukhani joining in to tell us what he's strategizing today. Sudarshan, hi, morning. Over to you then. On the Nifty, what are you recommending, as well as on specific stocks?
Yeah, good morning again. See, on the Nifty, the trend is still up, but markets are likely to become choppy after that big up move yesterday. So the recommendation is to wait patiently. If there is a sharp intraday dip towards 10,500, that's the futures rate, then we want to become a buyer and take advantage of that dip. Otherwise, this choppiness is likely to continue. 15 points up, 10 points down. There is no trade apart from that sharp dip. But we are only buyers. We are not short sellers at all. Continuing on that theme, we are looking to buy mid-caps. Attractive mid-caps are available where there is a breakout imminent, where there is a breakout already taking place. So we want to buy these stocks, starting with Jubilant Foods. Here is a stock that's making lifetime new highs consistently and regularly. That's a buy for the day. Similarly, Maruti, this is a blue chip. After a very brief correction, Maruti has been slowly and steadily moving up. That's an opportunity for the day in Maruti. And the third is also a buy, Shriram Transport Finance. That is part of the NBFC group, which is looking up after a long decline. So this is an outperformer in that group. 3 buy ideas, and primarily avoid the Nifty.
I just wanted your sense on what I think it was Midhani, was it? It's coming up as a big gainer the last 2 or 3 days. Never looked at this stock or the business it is in, but just look at the charts for us if you can, Sudarshan.
Yeah, I didn't get the name. I'm sorry.
Okay, Midhani. Midhani.
No, that's the reason I didn't get it.
Okay. There's good reason then.
I don't track it.
Ekta is telling me it's a new listing. Okay,
so all right. Not much technical data, I think, on it.
That's the reason.
I mean, so
no, there would not be.
Yeah, the price is 90 rupees 4th of April, and it's about 140 rupees now. So yeah, I mean, it's done very well. Anything else?
Well, Sudarshan, I don't think you mentioned a couple of the metal stocks, or did you? What would you be recommending on the likes of Hindalco as well as Tata Steel?
Oh yes, among them I would be recommending, we have recommended NMDC. NMDC is a stock that's come down and is now suggesting that an upside is available there. So better than Hindalco for the day is NMDC, but yes, the sector itself is cheerful for the day.
Okay. All right, Sudarshan, we have a couple of Twitter queries for you now. The first one is a query on HDIL. I think our query is basically 500 shares of HDIL at 55. Will the stock reach 75, and how long should the Twitter user hold the stock for? Sudarshan?
Well, I don't know if the stock will reach 75. I mean, at some point, many years later, it may reach. I don't think that was the answer he wants. HDIL is not a good stock to be inside the real estate sector. So the suggestion is, we have no idea whether it will reach 75. The best thing is to switch from HDIL to either Godrej Properties or a South Indian company like Sobha Developers, where you would have a strong chance of getting a 30% gain. So avoid HDIL, get out of it, switch to the better real estate stocks.
We got one more question, and the user essentially wants to know whether Vakranji is a good buy at current price levels. I don't think anybody has asked that question in a while. Sudarshan?
Well, actually, you need to put the chart of Vakranji to even to get that answer to this question. This is a stock that fell consistently circuit by circuit. Then it started rising with a circuit, and then again it's falling every day on a circuit down. You don't want to buy these stocks. They are not good buys at any levels.
From 500 to 120. 500 was what? January of 2018. Yeah, 25th of January 2018 price was 500. Plus it's about 120 now. And as Sudarshan pointed out, it's locked down even today. And it's been locked down for many days. A flash at the bottom of the screen. Sudarshan, thank you for joining in with that, and we'll speak again soon. The Supreme Court has extended the interim protection to Karthi Chidambaram till the next hearing, and they've also set the next hearing date to the 4th of July. That is information coming in from the courts. Let's get some F&O strategies as well. Gaurav Bissa, derivative analyst with LKP Securities, is with us now. Gaurav, good morning. Your sense of things, and what would you trade?
Good morning. For Nifty and the Bank Nifty, the momentum is quite strong, and there can be some minor hiccups sort of. Nifty can fall by another 30-40 points, not more. Overall trend is very strong. 10,500 call option come under very high concentration. We gave a close yesterday. We are comfortably trading about 10,500 even now. Possibilities are there that we can head towards 10,600, 620. That would be the next hurdle, or one of the biggest hurdles we can speak of. Once that is sustained, we can expect another 200 point rally coming in. But for now, I think one can play for targets of 10,600, 620. For Bank Nifty, a 200 point jump from the current prices cannot be ruled out in a day or two. On that premise, I have a couple of long recommendations. My first recommendation would be buy on PVR. This is one name that has been looking quite strong. It has added about 2% over additions today, so long position has seen getting built on the verge of a good breakout on daily charts. It can head towards the level of 1365, 1370. One can have a stop loss of 1330, small stop loss, and buy PVR. Second would be buy on Century Textile. This is another name that has been going up on account of short covering in last 3 to 4 trading sessions. Today we are seeing some of long positions getting built. This is another name to see a swing high being made today on daily charts. If the current levels are held, I would not be surprised stock heading towards 1300 in a short period of time. For trading per se, a day or 2 day trade, one can have a stop loss of 1225, buy Century Textile futures for targets of 1265, and sole sell recommendation would be IRB futures at around 275 to 70 levels. We have seen good amount of unwinding happening to the tune of 7.5% to 8%. Today some shorts are seen getting built on the verge of a decent breakdown on daily charts. One can have a stop loss of 266.5 and play for targets of 256.
Okay, all right. We're going to let you go on that note. Thanks very much for joining in and taking us through all of those strategies. Well, for the markets, the Nifty is just about flattened out. We have the mid-cap index, which is managing to hold with a positive advance decline ratio, as well as talking about what's happening in the commodity space. We have Manisha Gupta joining in to tell us what she's looking at. Well, Manisha, it seems as though metals is again top of mind.
It is, yes, and in that space as well, it is aluminum, which continuously seems to be outperforming. After 11% gains in the previous week, we have seen nearly 5% gains come in for this week as well. So clearly near those 6-year highs as that one is trading. But it's not just the metal space, it has been currencies as well, which have seen a lot of impact coming in the recent days. The global trade relations, the escalation of concerns and tensions in the Middle East, all of that has impacted a lot of currencies as well. And the dollar index, of course, continues to be trading in the weaker side. We still are trading below 90, and it's not such a great day or week rather for the Indian rupee as well, where we did see a 5-month lows yesterday. So to discuss more about the global cues and the domestic happenings, we are now joined by Michael Snide, who is Head Global Forex Strategy with BNP Paribas. Michael, hi, good to have you. What is your sense on the Indian rupee really? We are down nearly 3% in this year. There have been a lot of domestic factors as well, but would you say it has to do with much more global cues that we are looking at that seems to be impacting currency?
So I think with the Indian rupee, we're not yet at a panic situation. Yes, it has weakened 3% over the last couple of months, but now the level of dollar rupee is around about the same as it was at the end of 2017. We think, however, now is quite a pivotal moment, because if you look at not just how the currencies performed, but also how the bonds have underperformed recently, this we think is going to start becoming a concern for foreign investors who have been buying Indian bonds because of their high yield. The move that you've had in both the bonds and the FX in the last few months has probably wiped out about equivalent of 1 year of yield pickup of holding those bonds. So we think this is the point in which these investors are going to start questioning, do they still want to hold this position?
So, Michael, what is your sense on the rupee range now? We already are trading at a 65.5. From here on, how much of a further decline, depreciation do you see in the currency?
So we're targeting Indian rupee moving up towards 67. So, most of that move has happened already. So it does mean that the period going forward we think will be more stable.
The other important global development, of course, has been the Fed rate hike that we've seen, one of it already. First off, Jerome Powell's meeting being chaired by him as well. What is your sense? What are you picking up for that one meeting? And how many rate hikes do you actually see? And, of course, its impact on the EM currencies?
It seems to us at BNP Paribas that the Fed has made a clear shift away from inflation pressures and now concentrating more on the growth outlook. This is looking very firm and is giving the Fed confidence. We think the Fed has the confidence to raise rates another 3 times this year, slightly less than the market is currently pricing. In terms of the market's reaction, we've seen that although the Fed has been in a rate hiking cycle for some time, financial conditions in markets haven't tightened considerably. And this is because we still have a Fed that is very steady as it goes, it's watching carefully the data, and it's not wanting to raise rates too quickly in order to stall the economic growth. So this does give us confidence in the emerging market backdrop. Another thing that gives us a lot of confidence in emerging market assets is the fundamentals around the external funding requirements of emerging market countries. These have declined substantially in the last few years and means that EM in aggregate is less sensitive to overall global financial conditions.
Michael, coming to the US dollar then, and last year wasn't such a great one. This year as well, we have seen more bearishness or weakness coming for the US dollar. Going by the global cues and the global trade as well, would you see further weakness coming in for this one?
We think that the dollar will be declining between now and the end of the year. And one thing that a lot of investors have to kind of get their head around is that this year we think is going to be a year of dollar weakness despite the Fed continuing to be raising rates. The reason we think we'll see the dollar decline is partly because we're seeing a resynchronization of economic cycles across the globe. So while the US economic recovery is maturing, the economic recovery in the Eurozone is really just getting started. The other key aspect that we think is going to be leading to a weaker dollar is that we think that foreign investors are going to have less appetite for US assets throughout this year. So we think this will be particularly the case for US Treasuries, where against a backdrop where the US Treasury is going to be issuing more bonds this year, we think there's going to be less foreign demand for these US bonds. So what this happens is it gives you a situation in which we expect to see US yields moving higher. We're targeting 10-year US yields to be moving to 3.25. And because this is being caused by less appetite from foreign investors, it will correspond with a weaker US dollar.
That point is well taken, Michael. But also, where do you see a better currency play then? Because high-yielding currencies until now have done well. There is this tightening of monetary policy around globe. Many central banks seems to be talking about it. What is your sense? What areas, countries, or currencies rather, do you see actually appreciating versus the dollar this year?
So in the major currencies, we think that the euro still has further room to run. As we get the ECB starting to tighten policy later this year and followed by rate hikes next year, we think the euro is still a cheap currency and has room to rise up to 134 over the next 12 months. The other currency that we think we will see perform against the US dollar is the Chinese renminbi. We think that actually the kind of negotiated outcome that we're expecting from trade wars will correspond with a strengthening regime for the renminbi.
All right, Michael, we'll let you go at that. Really appreciate you coming by and giving us your sense on the global currencies. So clearly the Indian rupee is headed for further decline. 67 is the level coming in from BNP Paribas, but they expect that the euro and the Chinese yuan are a couple of currencies to watch out for.
About 8 points on the Nifty. 10,536 is where we stand at this point in time. I just want to take a very quick look at sectors. I mean, so if you can put these up, the Nifty PSU Bank Index is up about 0.8%. You got the metal index, which is up about 0.75%. The real estate index is up 0.6%, and the energy index is up about 0.5% as well right now. I mean, IT is down 0.4%, and this even as I think the currency continues to slip. It's at the bottom of the screen. I think it's slipped a little bit more. Manisha was just talking about that with the guest in the last segment. But the IT index has had a pretty good run through the course of 2018 so far, and it's coming off. Only one big IT number in terms of results has come out, that is Infosys. Pharma is the other sector, which is actually both of them, IT and pharma. Both of them are slipping. The pharma index is down about 0.4%.
I just want to point out, Prashant, the kind of rapid depreciation that we've seen for the rupee. So on Friday, the closing of the rupee was 65.2. Yesterday, we closed at 65.49, and currently we're at 65.63. So that is quite a sharp depreciation if you look at it, all the way from levels of around 65.2 on Friday's closing to the level that we're on an intraday basis, which is at 65.63.
I mean, yeah, absolutely. Let's see. And we'll, of course, get you more in terms of opinion, etc., on the currency in a bit. We spoke with Atul Suri earlier in the day. He tracks charts. He runs Marathon Trends PMS. And this is his view on what he makes of the recovery in the market and what he likes, isn't it?
We are in a longer term 3 to 4 year bull market, and yes, there will be corrections, and you know, these have classic patterns really. We break 10,000, psychologically important level. Everyone's talking of 8,000. 200-day DMA gets broken, so all the technical analysts are coming out with 7,000 targets and things like that. And what the market does is totally different. In fact, it's recovered half the fall. It's 5% higher, yet there's nobody who's bullish. The index taking out 10,600, which is very near, would be the ending of this kind of correction. Leadership is emerging in the market. It's a new sector. There are stocks who are very strong, but yet people will not buy them because one is they've run up too much or the valuations are too high. And I also feel that the coming quarterly numbers, you will have positive surprises, which will sort of, you know, add to this universe. So I personally think I really like the kind of fall that was. Jan was a difficult month. Feb was a difficult month, but you're already seeing that in this month, relative to the index, stocks and portfolios are doing much, much better. I guess the biggest dark cloud for India is crude. If I say that crude will go to 90, people just laugh. People were laughing when I would say 70 6 months ago. So the fact is that crude, which is a very important element in the Indian economy because of the level of imports, is on a very, very bullish trajectory.